Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of Bitcoin, taking a look at the on-chain data and a bit of the macro view for the charts to take a look at what's been happening most recently. As I get into the video, if you find it useful and informative, hit that like button. I do appreciate that. If you're new to the channel, then why not consider subscribing, tapping the bell, selecting all the notifications, and you will not miss another video update. If you haven't yet joined us in Discord, guys, you're missing a trick. Check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out. Okay guys, let's jump right down into this one. So what we'll do is we're going to start things off, I think, by taking a look at the on-chain data, then we'll jump into the charts afterwards. So up here, this is kind of top level kind of stats for BTC. Top right hand corner, we have the inflows of Bitcoin going onto the exchanges, the outflows of Bitcoin coming off the exchanges, and then the difference between those two numbers. This is all from the 1st of January 2023 up until yesterday, which was the 27th of February. This shows us with 1.5804 million going onto the exchanges and 1.5769 million coming off the exchanges. This means that 3.58 thousand Bitcoin more has gone onto the exchanges than has come off. Why is this important? This is important because we look at the inflows as the supply and the outflows as the demand, and price action is very much dependent on supply and demand. If there's a shrinkage of the supply, as in not enough Bitcoin's gone onto the exchanges to be made to be sold, then essentially the price will go up because there's fewer supply to meet the demand. And when we have insufficient demand and an increase in the supply, then price tends to go down. Basically, the supply is drowning out the demand, and basically there's ample amount of supply to deal with whatever demand is there. And essentially that is where we sit right now. At top level here, as I said before, we are quite neutral. This 3.5 thousand is hardly any Bitcoin whatsoever. So at a macro level like this, the market's neutral. It's not bullish, it's not bearish. Okay, we definitely do not have the volume pushing through to be thinking that we're in a bull market. We're about 1 million short on Bitcoin inflows for the same time period. This is something that we can see when we come over to the inflows and the outflows of 2018. This is not quite up to date for the current data range. I think this goes to the 23rd, so we're a few days out, but you can kind of see it's 2.4 million versus where we are right now at 1.5 million. Okay, so when we take a look at it from that kind of point of view, we know that we are short of the volume that really you would expect to see during a bullish market. So we know that we are not bullish, but we also know that we're not necessarily bearish right now either, because again, we do have a reasonable amount of outflows that basically make this entire thing neutral. It's fragile market, as I've said many times before. So inflows, outflows, supply and demand, very neutral at the moment. This is also something that you can see with the Bitcoin balance of exchanges. You can see here that the supply has basically just been very neutral, just trading sideways. You can also see it here within the mid bar. Each one of these bars on this graph is 30-day average of the difference between those two inflows and outflows. So basically, if you think about this 3,580 Bitcoin, if that were a 30-day average, that's kind of how you would look at it. It'd be one of these bars. So the number's not important, but the graphical representation of the neutral market really is important. So we can kind of see that we have the numbers if you prefer that. You've got the graphical representations if you're more visually led. You can kind of see that these things are doing this, telling us the same piece of information. One is just kind of split out and gives you the kind of the accurate number. So as we kind of think about this, it means that essentially I don't think it's going to take a lot to push the market up, and it's not going to take a lot to push the market down. And I think this is really summarizing retail investors incredibly well. We talk about this all the time, essentially that it is a market right now that is being propped up by retail, and it is retailers who are basically quite neutral. They don't know whether the price is going to go up, and they don't know if the price is going to go down. They're just kind of hoping that things are going to play out. And as such, you kind of see this represented in the data here at this top level, where you can see that market is neutral. They don't know what to do. They don't know if it's going to go up. They don't know to push it down. It is completely neutral, which means what are the bigger institutional players actually doing and what are they up to? But let's go ahead and actually jump into some of that, right? So here we have Bitcoin Dust. This is basically your most vulnerable retail investor, okay? 0.01 Bitcoin or more. We've seen a significant decrease in the number of wallets. So the black line are the number of wallets that have at least 0.01 Bitcoin in them. And then you've got the orange line, which is the price action of Bitcoin. We can see that we were up here 11,588,509 wallets, and we dropped down to a low of 11,472,388. So we dropped just over 100,000 wallets. Okay, so we know that the most vulnerable retail investors with a small amount of Bitcoin in them, in their wallets, have basically now dropped down lower than 0.01 Bitcoin, and there's 100,000 of them there. So we know that there was a little bit of a shakeout at the most vulnerable level, but I do expect that to also cascade up to the higher levels eventually. We can see there's been a little bit of accumulation here, but again, I don't think it's overly that much at the moment. We'll see how that kind of plays out. Now, as I come up into the other retail investor wallet size, we have the Krill, we have the Shrimp, we have the Dolphins. Essentially, Krill is over 0.1 Bitcoin. We have Shrimp, which is over 1 Bitcoin, and then Dolphins over 10 Bitcoin. This basically symbolizes the range of retail investors, because a retail investor in my mind is someone who is just essentially acting emotionally and doesn't have a huge sum of money to invest, but a sizable amount, but not enough to move the needle, essentially, right? It kind of covers a spectrum of retail investors, from the most vulnerable at the Bitcoin Dust level all the way up to the high net worth individual at 10 Bitcoin or more. But essentially, these are wallet counts that and demographics of people who are acting the same way regardless of the amount of money that they're investing. They all act emotionally, and they're emotionally attached to their investment to some degree. This basically means they're going to overreact to price movements, and that's kind of where I've kind of tagged all these things together. So over here, we can see that there's been an increase in the number of wallets that have over 0.1 Bitcoin, which is the counterintuitive to that of the Bitcoin Dust. It basically means that these guys are quite happy to think that we're going to the moon and we should probably continue to dollar cost average in. Now, you can see that this is a big demand curve from retail investors. In fact, all of these retail investors have that same demand curve with significant surge to the upside, and we can see that they continue to do so. Okay, on the Shrimp side, you can see it's a little bit flatter, but it's remaining very much still that, you know, indecisive, but we're still thinking we're in a bull market kind of scenario. And the same thing for the Dolphins. You can see a little bit of an uptick here as well with over 10 Bitcoin or more. So the retail size wallets are, as I said, propping up the market. These are the ones that are essentially holding Bitcoin's price up for now. And the other thing we have to kind of bear in mind here is that although price has been moving down most recently, we've seen these wallets all going up, right? Which means that there's always a buyer, there's always a seller. Who are they buying from? And well, we can go up into the institutional level funding and we can kind of see exactly what is going on. We have the bigger players selling to the smaller players, essentially. So sharks, whales, and kraken. 100 Bitcoin or more are the sharks. These are basically traders. You can see that they usually follow price action incredibly well, and they actually bought up a load of Bitcoin before these surge to the upside, right? So you can see down here, these guys were buying up quite significantly during early December, and basically are now taking profits. You can see that they've been selling most recently over the last few days, and basically booking in those profits. You can also see that the whales continue to be selling. They continue to drop down again into new all-time lows in this bear market. Or bear market lows in the number of wallets that actually have over 1,000 Bitcoin in them. They continue to sell. At a 365-day view, it looks like this. Just so you know, it's not overly bullish from the whale side of things. I know that's counterintuitive to what you're being told elsewhere, but it is what it is, and the data is the data, and I'm not going to lie to you or anything like that. It is what it is. Yeah, do with that as you will. Over here on the Kraken side, over 10,000 Bitcoin or more. You can see here that it looks really sporadic. It pushes down, goes up, and so forth. Essentially, the Kraken-sized wallet is one of those that it doesn't really follow the logical kind of expectations that you might have of a investor. Instead, the Kraken-sized wallet seems to be just your manipulator. Let me show you the 365-day view on that one. So this is what's been going on with the Kraken-sized wallet. We can see that during the bear market, it has been accumulating, and most recently, it's just been kind of going sideways during this moment over here. Okay, so as prices come up, we can acknowledge that actually we're significantly lower than where we were previously. There was 117 wallets that had over 10,000 Bitcoin in them, and right now we are only rocking 116, right? Actually, it's 123 and we're 116 now. Okay, so bearing in mind that we were higher in late November after FTX crash, we were higher, and now we are lower, even though price has been moving up. So again, we'd think about that logically. We'd say, okay, well, why sell unless you thought that the bottom wasn't in, that kind of thing. However, the Kraken-sized wallet, as I said, doesn't operate under the same guise that you would think of as a retail investor or a institutional level investor. They are manipulating the market and hunting for liquidity, in my opinion. And let me show you what happened in 2018. This is what happened in 2018 for this particular size wallet. Accumulated during the bear market, it did have these little kind of fluctuations right towards the end here, but you can see that they dumped the entire amount on the market to flood, or more specifically, they flooded the market with excess Bitcoin, made it available to sell. Doesn't mean they sold it, but they made it available to sell, which basically brought in the actual bear market low. So let's kind of review on where the Kraken is right now. It's been accumulating during this bear market, just like it was in 2018. It is yet to actually dump its bags or to flood the market with excess Bitcoin. I don't think we're going to see that, though, not until we can actually see the retail investors selling their Bitcoin to the whale investors. Right now, the retail investors are still accumulating, and our whale investors are still dumping it. They're ditching it, right? So until those two kind of flip positions and we see whales buying and shrimps selling, only then do I think we'll see the Kraken starting to bring in that actual bear market low point. So essentially, when we take a look at everything, we can kind of say, okay, well, we have retail investors and the emotional investors kind of propping up the market, buying the Bitcoin from the institutional investors who are selling it to them. But for the most part, that never ends well. That always seems to end in a negativity, when it's usually retail investors getting wrecked. So let's jump down into the charts, right? So if we're following the money and we have a good understanding that big funds are selling their positions to retail investors, then we should probably be aware of negativity that would unfold in the coming kind of weeks and months, because essentially there's only one reason that big funds are likely to do that, and that is because they believe that the economy is not ready for a bull market and there's going to be lower prices, right? So they're going to be looking at selling their Bitcoin to retail investors and then looking to buy that same Bitcoin back at a cheaper rate. Okay, so you can argue, you can say maybe the wallet counts are wrong. You could also argue and say maybe whales are getting it catastrophically wrong for the first time in history, and maybe these billionaires and millionaires are going to be on the wrong side of it, and maybe retail investors are right. It's entirely up to you. I don't choose to believe those kind of things. I think actually these people know exactly what they're doing, and without their money in the market, it's incredibly naive to think that the prices are going to be moving up to significant levels. They will not be buying it at a cheap price. They will just wait until prices are much cheaper, which eventually they will do. And as retail investors are incredibly emotional, there's a high expectation that retail investors will get bored, fed up, frustrated, and will eventually sell. Or worse, the economy gets so bad that they have to sell, and they're forced into selling their Bitcoin at a cheaper rate to the very people who sold it to them in the first place. But let's take a look at the charts, right? Here we have the daily chart with Bitcoin paired up with USDT on the daily, and Binance is the data source. Now, as you can kind of see, we've had this move to the upside. It's been fantastic, but it's not really been demand driven. We can see that within the numbers. We know that a bull market would have an extra million attached to it in terms of the volume of BTC than we've actually seen, and we've moved 63%. So what's actually driven it is Forex traders dumping USD because USD was not favorable, and as the USD was ditched, the DXY also dumped, and as the DXY dumps down, you need to see more dollars to purchase your cryptocurrency assets, because again, we're talking about a USDT pair here, essentially. So DXY goes down, Bitcoin goes up, and so forth. Now, that got compounded with some FOMO action from retail investors, as you can kind of see within the wallet counts. So yeah, it's not the best. Now, what's happened here, though, is we do have these imbalances in the order books. These imbalances essentially are areas that price like to gravitate back down towards. So the expectation is that we'll eventually be moving down into these levels. They don't always get filled out, but there's how do I word it? A high probability that eventually they will. There are a few, of course, down here which have never been filled. At least not yet, and you can speculate as to whether you think $3,000 Bitcoin is going to come in here and grab those. I mean, you can argue that we've tried to get close to these already and just failed, okay? But there are a number of these blocks that have been left behind in Bitcoin's history. You can argue maybe they just haven't been filled out yet, and eventually maybe they will. Who knows? One of the things that we do know is that we have 3 of them are much closer to us right now than the ones that were left behind in Bitcoin's history. So we can't get ourselves kind of too carried away thinking that you know, that's a guarantee, but there is a high probability that price will come back down into these. In fact, you can kind of see this one that was left behind recently, and we are gravitating our way into it right now. This one was almost filled, and this one not so much. So $19,000 is an area that I think is highly likely. I still think that there will be new lower lows because, well, big money has been selling at the existing lows. Okay, so they were selling down here at the FTX crash, the 2020, November 2022. Okay, down here they were selling then. So if they were selling down here, why on earth would they be buying up here? They won't. They'll be looking at buying somewhere down here, somewhere in the price chart, much significantly lower. Okay, so we want to bear in mind that big money isn't going to just kind of, you know, buy at a higher price. They're just going to kind of sit on their hands and wait for retail investors to get fed up, bored, emotional, and potentially require the funds, and we'll sell it there. The other things that we have to bear in mind with this daily chart is we have not changed our structure. We are still bearish. Our bigger macro here is that we are moving to the downside. We are yet to break this structure, and we have had no change of characteristics to the upside. So although price action has moved up quite significantly, we do not have any of those kind of key levels on our daily chart here when it comes to smart money concepts of change of characteristics. Now, we do have the minor changes of characteristics, that's all okay, but we don't have any of the major ones like this one here, for example. Okay, so we had the change of character up there, we had the breaker structure down here into the FTX lows, but we have yet to actually kind of move down significantly lower. Now, we do have a strong high, meaning essentially that's unlikely to get broken. We'll see how that goes, because I do think there's a potential move to $28,000, and we have a weak low. Okay, equilibrium is right down here, and we haven't yet come back down and retested that, so equilibrium is fair play as well, and also these fair value gaps, these imbalances in the order books. So essentially, I think everything here is looking at a macro level good for lows. I don't think there's any reason to think otherwise. This is not a 5-wave structure. I keep talking about it because people keep tagging me and stuff that's absolutely nonsense. We are not doing this. This is not valid. It's not valid because we do not meet the requirements of a wave 1 down here. It is not a diagonal. A diagonal structure like this is not valid. Wave 3 has to be at least 1.618 times wave 1, and it is simply not. So we know we're not doing a 5-wave structure. It doesn't even really fit a WX, Y, X, and Z because the Y wave hits 1.618. Although I can't find a hard and fast rule on that, it's very unlikely that we would expect it to be above 1.618 times that of the W wave. That being said, I think instead what we're doing here is a string of corrections all being pulled together, and therefore it makes it look like a certain structure is actually here when it is not. Now, it's possible that, you know, we are just going to have a decent correction and consolidation for a double bottom. I just think that's unlikely considering the wallet counts. But, you know, let me know what your thoughts are in the comments down below. Really interested to kind of get everyone's thoughts and opinions on BTC here. I'm going to leave the video right there. If you found it useful, hit the like button. I do appreciate that. If you're new to the channel, subscribe, tap the bell, select all the notifications, and you will stay up to date with everything that we do here at Cheeky Crypto. If you haven't yet joined us in Discord, you're missing it out, guys. Check it out. Linked in the description down below. Until the next one, though, have a fantastic day.